Hello, everyone, and a very warm welcome to today's major markets update for Friday, October the 18th, 2024. Another up week for most of the indexes. Definitely S&P 500 is up for the week about 0.5%. The Dow Jones is up 1.1%. The NASDAQ and NASDAQ 100 are about 0.1 to down 0.4%. NYC up about 0.9%. Russell 2000 up 2%. Semiconductors are down 3.6%. So you can kind of see where the money is at and which indexes are doing well, and why we are more bearish on the semiconductors, as we showed this week earlier, than, for example, the Dow Jones and the S&P 500, with the NASDAQ 100 somewhere in the middle. And also the IWM/Russell 2000, we still think it can move higher. Now, the question then is, of course, sell short, really? I see nothing yet that suggests that we should sell anything short. We need to break below certain price levels. Why? Because this is risk management. Just started to short in a strong uptrend, which is 100% uptrend. It's not a wise thing, nor is just selling everything blindly a wise thing. I did a poll earlier this week, and I'll show you that, where the majority of the respondents, it's a small poll. I got 30 votes, but out of those 30, almost half of people were selling on Tuesday. And where we're now, you should have been buying. I personally sold at the open and rebought at the close. That's for my trading, while holding as well as through my SPXL position based on my ETF trading system, which is in a different account. So I have different accounts, a lot of plates in the air. But I only sold at the open and rebought. That I thought that was the greatest thing to do, and it has served me well. Whereas my ETF trading system told me to stay long, so I was simply holding, and I think that was the wise thing to do. The majority was unfortunately wrong. That's often the case. So please do not follow the majority. Follow objective analysis as we provide. And I don't want to piss on anybody's territory, but if you see a tweet like this, this is my largest short position so far this year, by somebody who has like 90,000 followers or 85,000, just based on a put call ratio, not on the actual indexes and price. This is not sound trading. This is, I don't know, clickbait or something. I don't know. So please do not sell short until we have full confirmation. Yes, we all want to short right at the top and exit at the bottom. The same, we want to go long at the bottom and sell at the top, but we know that's never going to happen. We're not going to front run anything until we are certain that the trend has turned from down to up and from up to down. Let me be, very clear on risk management. I'd rather take a 10% trade with 100% certainty than a 100% trade with 10% certainty. If you do not understand the difference between those two, also those that are listening through YouTube, please contact me. Once again, anytime I'll take a 10% winning trade, right? I'll make 10% with 100% certainty versus a 100% trade with 10% certainty. The last one will guaranteed blow up your accounts if you keep doing those. The first one will guarantee grow your account because you have 100% certainty that you will make 10% every single trade. You got to take that one, hands down. The other one, I'll pass. And going short right now is a 100% gain with a 10% certainty, 10% even at best. So please, that is why we use these warning levels. That is why we use the Elliott Wave. That is why we look at market breadth, all those different facets of the market to tell us if a top is in place, with price always being the final arbiter. So here we have the Dow Jones, and we believe we're still in this wave 5. That can target anywhere between 43,778 and 44,990. Now let me update the warning levels for the bulls. That is today's low, and the second warning level will be Wednesday's low, and the third warning level will simply keep as is, as well as the fourth warning level. Okay, just to make sure. So we really don't want to see things move below Wednesday's low, because that is a first sign of a lower low. But the trend is still 100% bullish. So why would you short a 100% bullish trend? You should long a 100% bullish trend by dips. So if you had bought on this Tuesday drop, you'd be doing really well. I did. I had one of my best weeks in trading since a long time. Anyways, so this is the wave count we're tracking. And again, this is the weekly chart, seen it many times before. Zero indication of a top. The negative divergence, which is a condition, not a trade trigger, has been erased. MACD is positive. Money flow is still lagging. That's about the only one. The trend is 100% positive. Let's also add here the simple moving average, the 10-month one, or week. This is a weekly chart. Sorry, the weekly chart. That one should then move up. This one should move up. And the Bollinger Band is then the 20. And that should show us that we are in a 100% uptrend. Okay, and that's what we want to see. So please, and I've never said to short anything, neither do I say to long anything. That decision is yours to make. Just pointing out the possibilities. Remember, that's what I'm doing. I'm pointing out the possibilities. At any moment, there is infinite number of possibilities that the market can choose. It is up to me to pick the most likely one based on price patterns that I recognize and that have a historical record, like a impulse that has a historical record. And after 5 waves up, we know we get at least 3 waves down and another 5 up that we need to recognize. How the 3 waves down will materialize, we don't know beforehand, but we do know after those 3 have completed, we should see another 5 for at least a ABC higher. Excuse me. So that's where we are currently with the market. So as we are pointing out the possibilities that the market can take with the ones of the highest probability always lined out, that will give us then our 70% certainty level. So that's pretty good. 70% certainty in a trade is really good. So we can still target 21,500 versus this C is 1.618 relationship. C is A, or 3 is 123.6 times 1. There's no indication we cannot. Where is the market in relationship to its moving averages? 100% bullish. So if it's 100% bullish, I see no reason to be taking a 100% bearish position. Quite the contrary. We'll see that when we believe it when we see it. Okay, and so far I don't see it at all. Yes, we can have topped, but we need to see it. The trend is currently 100% up below Wednesday's low. Let's change the warning levels for the bulls here. That is a good warning level that we have put in a top. So we've lowered that one a little bit. So again, for the NASDAQ 100, that's not a good sign that you start lowering the warning levels. But otherwise, from a trend perspective, still looks good. Above this week's high, and we're looking for 21,500. I think that is a much more certain trade than we're currently in. Currently, I don't see it. Below, I would say, Wednesday's low, that will increase the odds that we're going to go to about 19,750. And of course, below the previous week low here, I think that's early October, then below that's 90,600. There's a lot of air, 90,300 and below that. So until then, I think it's better to be bullish than bearish. Again, this is the bearish wave count. We can still target 20,600, by the way, for a somehow more protracted B wave. And if I then look at the regular NASDAQ, this is the closing price chart. This does not look bullish, of a bearish to me, excuse me. That it doesn't look, it's pointing higher with the upper Bollinger Band. So this can still move significantly higher if it so desires. And you can also see why we need to hold this level earlier this week, and especially this 70,900 level on the NASDAQ. So the first warning will be below this week's low, right? And the second warning will be below the September-October lows there. So those are critical. Other than that, we're still making higher highs and higher lows. I'm going to short or go into inverse ETFs until I see the opposite. So the opposite is more evident for the semiconductors in that we have this bearish engulfing candle, as I mentioned before. So this is not a happy looking chart, and the last 3 days are not really enticing. So this doesn't look too great. So this has the potential for a completed counter trend rally. Okay, so that this is something we need to really consider. But back above 54.50, and again, I will be looking for about 57.50, potentially 58.50 for a more protracted B/2 wave. B waves are very tricky. So that's the potential that's in the chart. But right now, I cannot say, oh, it's going to happen. I need to see it break higher with a first warning for the bears now, of course, above yesterday's high. So not much has changed since the last update. I just don't like this index as much as the other ones. Okay, my preferred indexes to go are the Dow Jones and the SP 500. My least preferred one is the semiconductors, and I think tech is somewhere in the middle. I'm long Apple though, but that's something else because that looks constructive. See how that's going to play out over the next few weeks. So S&P 500, yeah, that is a new all-time closing high. Yesterday we made a new all-time high. It's hard to be bearish on that one. Still could target 59.35 to 60.61 there on ideal Fibonacci extensions. And we're getting already awfully close. Some negative divergences are starting to occur, but other than that, it's a 100% bullish chart. We've not broken below any warning levels. So I'm going to raise it to yesterday's low. The second warning level will then be, of course, this week's low. The third warning level, we'll keep it as is. Okay, I think that's fair enough. And then the final is, of course, below the September 6th low. Okay, we might soon start to raise that to the Fed low there, but otherwise, I like it. Everything is on a buy. I have buy signals on the MACD, the RSI, everything. So I see no reason to turn bearish. But as we move higher, never forget to raise your stops like we're doing here, these stop levels to tell us potentially top is in place. Take partial profits along the way, all that good stuff, depending on your time frame, right? If you just trade something really short, like you buy it on Tuesday, sell it on Wednesday, you have different parameters than the ones I'm showing. And for those that have been with me for a long time, as you see, I'm showing the hourly charts less and less. I think the focus should be on the bigger picture. With the hourly chart, we can easily be misled by misinterpretation of the waves. The more scribbles you have, the more easier it is to go wrong. So then we have here the weekly chart. And as you can see, this can go all the way to 6,500. Yeah, wow. Yes, we have a 1, 2, 3, 4, 5 potential setup. This is slightly different than what I'm showing here. But again, it shows you we can get there, right? 1, 2. This is then the ending diagonal. But if we do a regular impulse pattern, and there's no reason to believe we will not, though the internal structure suggests it's more of an ending diagonal. But the ending diagonal, please note, targets also about 6,200, 6,300. So this is not too far off. So why would you want to short this? I just don't understand. Money flow isn't too great there, but the CMF, it looks better. Everything else is pointing higher. I'm actually going to change the MFI to a MACD because I think that is a more valid indicator, since otherwise I have two money flow indicators. There we go. Looks still bullish to me, right? That's a buy signal. Yes, we have negative divergence. It's a condition, it's not a trade trigger. We just have to monitor it. If price then starts breaking below certain price levels, then we know, aha, yes, we were indeed seeing less inflow of money. It is, of course, never good to see less inflow of money. Since March, it's definitely gone down. But since August, September, it's gone up. So we can easily target 6,500. It is possible that potential is in the chart. And as long as we stay above these critical levels that we pointed out here on the charts, we should be okay, especially the September 6th low, and expect at least this 59.35, 60, 61. There's no reason to believe we cannot go there. It's all contingent on holding above these warning levels, but I see nothing in the chart that tells me we're not going to go there. But if we break below Tuesday's low, it starts to increase the odds we're not going to go there, and that this was then a more significant top, but it won't be confirmed until we drop also from a significant point of view below the October 6th low. Until then, the trend is 100% your friend, and it's 100% up. Price is well above the 10, well above the 20, well above the 50, well above the Ichimoku cloud, well above the 200-day moving average. A 100% bullish trend. I know old tops occur, of course, with 100% bullish trends. That's something else. But then, of course, we need to see prices move down. For example, here in July, right? As you can see here in July, you had this gap down, and the next day you broke below this set here. So that would be something similar, right? That's why we say, watch out. And then you get the retest of that low, and it continues to move lower. That's kind of what we're looking for from okay, the top is in perspective. And this is your trend. This is the long-term trend chart. These are all moving averages, and it's 100% bullish. So I like it. So I have to say I am bullish, right? Because the trend is bullish. Now, the Elliott Wave Count can, of course, always say, well, it could be a B wave top, all that stuff, but it's a possibility. And is it probable? No, it's not. So moving on, this is the IWM, and here we have all these different CSA targets, anywhere between 232.5 and about 235. And now it is up to the market to decide which one it will take. So the A and the B have been confirmed. This is not a bearish 1-2 setup anymore. That was our alternative anyway, and we should now be in this gray C wave. And let's see what we're going to get. We broke above 224. Okay, we're just inches away of breaking above this high, the 227.5 high. But this looks really, really good. We've broken above it. We're holding above it. So I think we can still move higher on this index as well. And we're going to raise the warning levels, of course, for the bulls. And I would say the first one is that 224 level. So I'm going to take then this away. So that would be there. And the second warning level is going to be there after that big up day. The third warning level is, of course, going to be there. So we're raising this significantly, which means it's still a bullish trend. I like it. Let's stick with it. How are we doing on market breadth? This is the bullish percent index for the NYA. It's rising with price, so this looks good. It's zero indication of a top. 96% of all issues on this index are on a PNF bullish signal. That's good. How about the AD line? Oh, oopsies, it made a new all-time high. No bear market, which is multi-year corrections, happen from new all-time highs. Has never happened in the history of the stock market. So most likely it won't happen now. We can get severe corrections. If you see here, from a wave perspective, 1, 2, 3, 4, 5, but then we have another 1, 2 here and another 1, 2 here potentially. So this still looks 100% constructive, right? You want to see a price move higher with negative divergence to start to suggest, this uptrend is running to its end. Again, we can even have a double-digit correction, 15% from here on out. Absolutely. That doesn't mean you should sell everything, but it also means that if that happens, that correction is going to get bought up. That's pretty much every single time in the history of the stock market. That's what this signals. Okay, so this doesn't signal a new bear market. This doesn't signal a top. Quite the contrary, this signals continuation. Bigger picture-wise as well, if we look at the new highs minus the new lows, this is still a 100% strong trend. Okay, this has been strongly trending higher. As you can see here, even this decline here in July barely budged this indicator. Okay, so that is also a good sign. If we go lower, but this longer term indicator keeps marching higher, it is probably a correction. If we then add, of course, the July correction here, you can see that actually the AD line made a new uptrend high new all-time high late August. Okay, while the index made a lower low. So that is also bullish. It's a bullish divergence. So all those things need to be taken into consideration. And I just want to make sure that we stay on the right side of the trade. July correction was quite severe. Again, double digits, minus 15% on some indexes. So there's nothing to mince about, but it also tells us to expect higher prices after that. And that's what we see so far, the Dow Jones and, of course, the SP 500, not yet in tech. But again, semiconductors, we are not as optimistic about as the Dow Jones and the S&P 500. And therewith, tech is still stuck between a rock and a hard place because it contains a lot of semiconductors. New lows, benign, 20 for the NYA, 27 for the NASDAQ, benign. So take that. Here we have the McClellan oscillator 23. It's nothing great. It's not in the hundreds, but hundreds are most of the time kickoff waves. It's not 60, 70, but more stocks are advancing than declining. So that's positive. As such, the SE gave a new buy signal, which is great. And once again, we had this declining SE while price moved higher. Once again, we've seen it twice now before this year. And I think it's a hallmark of a strong market that is simply able to ignore this negative breath and keep marching higher. Okay, that's really what we're seeing. And that's fantastic. So we're back on a buy signal. And it shows you also, if you use this one for shorting, don't, because why? Price is the final arbiter. These are just indicators. So we should now be somewhere like this, right? Somewhere in this regime there. And here as well, you saw that market breadth was rising while this one was declining. Very interesting, huh? How that happened. So on a decline, actually market breadth was increasing. So there are some contrarian signals going on, and that's why we need to follow price and not a price-derived indicator, so to say. But here we go, positive. So I expect higher prices in line with our Elliott Wave Count and the trend. Now, last but not least, our PMO buy all sell all indicator remains on a buy after a budged ideal sell signal that got bought up. So we're back in the ideal topping zone. So that means, we're there, but it can stay for a long time in the ideal topping zone and march higher. But it also shows us that the trend is up and not down. So this is good. Overall, we remain bullish on the indexes, contingent on holding above key price levels, with a first warning being Tuesday's low. If we break below Tuesday's low, or there's always some second warning, we start to make a lower low, and we can then easily revisit the October lows. And that's definitely something we don't want to see. But for now, we prefer to look higher. 5950 to 60, somewhere around there still seems attainable. And the Dow Jones as well, marching higher into the high 43,000s to low 44,000s, all seem attainable. Semiconductors were not too fuzzy and warm about. Yes, they can bounce for the next few days. But other than that, we don't see too many constructive setups in the semiconductors due to Tuesday's very bearish candle, and the tech should be stuck somewhere in between. Breaks above this week's high on tech and the semiconductors will point to the 22,500, I believe, for the NASDAQ 100. Is it 21,500? Potentially as high as 22,500, indeed. And the semiconductors can then target the 5,800 for that little gap that we're still having on the chart. That's all I have for this week. But please remember, right, the AD line new all-time high. I think it's critical. Please remember our long-term indicator is also still pointing up. Market breadth is still positive with very few new lows. So under the hood, things look really good. The price looks still good as well. A new all-time closing high on the SP 500 is not bearish. Take care, trade safe, have a great weekend, and we'll see you all next week.